Okay guys, I'm going to go into the DAX for about 17 pips. Let me show you. First of all, I need to kind of set this up and show you a little bit about what I'm up to. So first of all, let's just pull this in. So what we're looking at is essentially this. Now, what this is telling you is what I'm going to do inside of this trade. Now, I've already told the guys in the group what I'm doing. Let me just kind of show you. Pull this across. These videos are consistency just for the squad, really. So that's what I've just told you. There's the current news. There's nothing to worry about at this moment in time. And I've just broke down exactly how I'm going to trade this. I do it for them all the time. So not only do I tell them what I'm doing, I'll break it down and show them how I'm going to trade it. Now, my order is just actually triggered. So I need to adjust that. So let me just get this out the way while I make a quick amendment. We're looking for 17 pips. So I'm just going to, oh, thank you very much. So there we go. That's where we're looking to get to. Now I'm actually going to stage in against this big push here. Now what I was looking for was the break of this candle or a retracement back over on itself. Now there's a lot of momentum in the market, as we can see. And the idea behind this push is, well, it's Monday morning, which is very dangerous to trade anyway, but you kind of need to let it show its hand a little bit. So from 8 o'clock, which is this candle here, you don't really do anything for the first 30 minutes. So 15 minutes, break or the retrace to get back into it. Now, the general push of this market is to the buy. So if it's going to continue to push up, these are the areas it's going to look to get to, these 2 points. Now, if you know how to draw levels in, it's actually a no-brainer. You know, you'll easily get this sort of money. Right, so let's step this back slightly. What else can we see? What have we got? Well, if you're looking at that, that's an overextended candle if you've ever seen one, but you need to let it close. Okay, right? Well, if it's going to close and it's pushing higher, it will try and get here. Why? Look at all the clusters. There they are, all there. All right, so it's a nice simple way to trade. Now, as it's coming up onto target, you know, you can kind of watch what's going on here. You can kill it off if you so wish. You know, what's that going to get us? It's going to get us 87 quid if it hits up into target, which is what we want. But now look at it a bit deeper though. You hear about supply and demand and everything all the time. Well, really, a supply and demand is just a high and a low. So where was the last low? Well, it was here. Okay. Where's the last high? Well, it's here. You know, that swing point where it rolled over. So again, it marries up to where these levels are. That's if you want to go down that route. Where's the next one? Well, the next one is here, here, and here. But truly, where are they? Well, if we open that up, it's actually all the way up there. All right. So that could be where this is pushing to, but it's a bear market going down. So you've got to treat these things with kid gloves. And therefore, target the 17 pips into that level seems to be the logical way. Now, if we drop this down into 15 minutes, and you can see it's like struggling and struggling. But so what? What can I do now? Well, we can look at this and think, well, there's key areas of that can also be sort of buying points. What can they be? Well, it's very simple. Just draw a fib on it. All right. There. It's hypothetical. If it breaks the top, I'll have to adjust the fib. But at the moment, if it comes down, where that 23 is, where that is, 38, even down into the 50, you could stage into that to come back out and still make a decent amount of money. Now, at the minute, 80 quid onwards, I'm more than happy. Why? Well, why not? Now, another thing to do is, if we just put these on, and I like to kind of show you different indicators. Now, each Monday, I'll do like a Money Monday, shall we call it, where I'll put an indicator on. So we'll go to the hourly. So out to the hour. We'll put average true range on. Oh, fucking hell, Steve. Oh, gone a bit too far. Got a bit too far. There we are. That's what I'm after. Right. Want the hourly. There you are, 53. So I can do 53 pips in an hour. Well, I don't particularly like that sort of scenario. So what I do is I third it, you know. So let's just a little calculator here. 53 divided by 3, 17.6. There's your target. So the ATR, up there you go, 87.50, job's done. All right. So really thinking about it logically, I've worked to an ATR target of 17 pips for the hour based on a third of a third. I've worked out where it could possibly go to, nice and simple, and then just followed the momentum of the market. Got no tickets, and there you go, 87 quid in, don't know, 4 or 5 minutes, if that. That'll do me for Monday morning. This job is not difficult. In fact, it's not difficult at all, as long as you plan it out. Okay, kids, hope that helps. Catch you all in the next one.